This is Satya Pradyuman of Cirrus Research. The latest issue of the Regional Outliers is just out. The title, Anything But China Strategy Intensifies. We've recently begun calling this the ABC strategies. The idea is that as China continues to struggle, investors looking at Asia and emerging markets will continue to look to diversify those exposures without potentially cutting the EM exposure or the Asia exposure. So in some of the recent reports, we've suggested that pretty much every other market starts to win in the region. So for instance, ASEAN with better fundamentals, India, and even some of the countries in Latin America because of nearshoring and infrastructure. So in this report, we followed through some of this in a couple of different ways. One, when we look to the Asia Pacific region, if you have to play defense, and we continue to suggest that, the healthcare sector in Asia Pacific looks fairly strong in terms of it's been going through a slowdown in growth. However, what we're starting to see is that earnings expectations are starting to pick up. So in other words, to retain exposure in Asia, look to some of these other more highly visible earnings groups. A second key area that we focused on was really the nearshoring benefits of Latin America and the consumer segments. This recent work begins to relate some of the sector relative values that we score. Some of this is based off of this particular kind of, as we call it, a dashboard or chessboard or Othello board. But what it does is that this ribbon at the top ranks all the key markets in terms of valuations and expectations. So a red on red, a red box, red dot represents the US expectations are still high and the valuations are still rich. If we look to a place like India, valuations are actually discounted and maybe expectations are more neutral. So what this report begins to do is really support or summarize some of the readings there. So for instance, materials is actually listed as being very constructive, where 6 of the key markets are currently positive. What this means is basically 6 of the 10 regions are undervalued with rising expectations. And so to some degree, we think that this is a very constructive call, given that we are looking now at potentially a bottoming of the profit cycle, except China, of course. And then finally, to just revisit this idea on the consumer in Latin America, I think thanks to the nearshoring effects underway, we've seen Mexico as an example. The markets there have really come back. We think that the spending that will continue to go through that region will continue to benefit the consumer. Take a look at the report. As always, happy to take your questions. Thank you.